Turkish Airlines presents Business Africa.
Hello and welcome to yet another episode of Business Africa. My name is Ronald Kato. This week, Zambia's debt woes are far from over as nearly $7 billion in external debt awaits a settlement. The country's painstaking journey to debt relief has led to criticism of the G20 as Ethiopia and Ghana wait for their turn. Plus, despite seeing modest growth, China-Africa trade rose to $282 billion in 2023, making Beijing the continent's largest trading partner for 15 consecutive years. And made in Africa for global markets, we report from Cameroon, where African manufacturers have gathered to take stock of the challenges and opportunities presented by regional and global markets. Stay with us for the details. Thank you for joining us. Zambia still has nearly $7 billion of debt on its books pending a resolution. That's despite a deal with bilateral lenders last year, which treated over $6 billion. The Southern African country's quest for debt relief has been long and exhausting. Zambia's trials and tribulations are closely watched by Ethiopia and Ghana, who are next in line for debt restructuring.
More than 3 years after defaulting on its debt, Zambia is still laboring to put its long-delayed restructuring of more than $13 billion in external debt to bed. Despite securing a deal to restructure $6.3 billion of debt from official creditors, including China, France and India last June, the Southern African country still has roughly $7 billion owed to bondholders and other commercial creditors waiting for a resolution. A deal with bondholder to restructure $3 billion of debt last October was rejected by the official creditors, dealing the copper producer a major setback. Zambia's situation has prompted doubts for the common framework that the G20 set up in 2020 to rescue countries in debt distress as a result of the pandemic. Critics say the vehicle is not fit for purpose and needs an overhaul. With the IMF program ending in 2025 and an election the year after, President Hakainde Hichilema faces a race against time to win debt relief. The concessions from bilateral creditors have already had an impact. Confidence in the mining sector, the country's chief forex earner, has rebounded with billions in investment announced.
Andre Chibuye is a country senior partner at PwC in Zambia. Thank you very much, sir, for your time. So Lusaka reaches an agreement with bondholders, gets rejected by the official creditors. Where is Zambia's debt restructuring process at as of now?
So the first step in Zambia's debt renegotiation was in about June last year. Agreement was reached with the official creditors on what debt restructuring would look like on give or take $6.3 billion worth of debt owed to other countries. When it comes to now the commercial creditors, starting with the bondholders, it's now getting an agreement that provides similar treatment, comparable as it's known, to that which the official creditors did. So we understand, or I understand, that there were some sticking points in terms of whether the agreement that was reached with the bondholders, the agreement in principle, did deliver similar treatment or comparable treatment, and it's basically ironing that out, which is critical. So 6.3 done, 3 billion in progress. The remainder, which is commercial banks, is more on a bilateral basis, but again, inferences are taken from what's agreed with the official creditors, what will be agreed with the bondholders in terms of what the terms will be. So it's a difficult process, a complex one, but we're meant to believe there is progress in that regard.
Andrew, lots of players, big numbers. To whom and where is Zambia looking now?
The broad parameters are understood. Zambia needs certain debt relief. In terms of quantum, that's already in principle agreed. The question is, how is that delivered in terms of a combination of haircuts, time extensions, interest rate reductions, and that is basically where alignment needs to be reached. And obviously the IMF, who are providing the support together with other parties such as the World Bank in terms of bringing agreement.
There's been a lot of back and forth, Andrew, but what kind of impact has the lack of a definitive deal had on the economy?
At the end of the day, what we have is uncertainty, and economies, businesses, individuals, you name it, do not thrive or do well with uncertainty. The uncertainty is what is the quantum of Zambia's debt service. For those who are looking to invest in Zambia, what does it mean for their potential investments in the short, medium to long term? But when you put this all into a melting pot, what we've seen is volatility in key macroeconomic variables. The exchange rate is largely driven by sentiment in the recent past. Inflation has been on the rise. Zambia is a largely import-driven economy. And ultimately, the cost of living for citizens escalating, which is a very big deal at the moment.
Zambia has been looking to the mining sector to forge some form of recovery, economic recovery. How are the prospects looking?
The prospects are definitely looking a lot brighter. We saw early on in this government's term of office, at the start of 2022, some reforms meant to make policy a lot more competitive and attractive, that has seen significant investment pledges and actualized investments into the mining sector aimed at improving productivity of existing assets, restoring or revamping some of the underperforming assets, as well as more recently some fairly significant announcements around new assets that are expected to come on board.
Andre Chibuye, thank you very much for your time.
Most welcome.
China-Africa trade grew 1.5% in 2023 to reach $282 billion. African exports to China fell 6.7% due to volatile commodity prices. Beijing also saw its trade surplus expand to $64 billion in 2023.
China and Africa traded $282 billion worth of goods in 2023, a 1.5% increase from 2022. Chinese exports to African nations rose by 7.5%, while Chinese imports from Africa totaled $109 billion, reflecting a 6.7% decline year-on-year, China's Customs Department reported. The figures mean Beijing maintained a trade surplus of $64 billion. China said the fall in imports from Africa was due to volatility in the prices of commodities such as oil and copper. China has removed tariffs on 98% of products imported from over a dozen African countries to address the trade imbalance. But with the deficit persisting, analysts say Beijing needs to offer something new to boost imports from Africa. In 2021, China set itself a goal to increase imports from Africa from $100 billion annually starting 2022 to $300 billion annually by 2025. South Africa remains China's top trading partner in Africa, with bilateral commerce reaching $56.61 billion in 2023, or 19.9% of Beijing's total trade with the continent. Other significant partners include Nigeria, Angola, Egypt, and the Democratic Republic of Congo.
Now, the export of raw materials and commodities has been identified as one of the major causes of structural weaknesses in African economies. Global shocks caused by pandemics and conflict are accelerating efforts to industrialize. At an expo in Cameroon, manufacturers are searching for ways to leverage the African Continental Free Trade Area and markets abroad.
An impressive number of visitors are flocking to the Yaoundé Congress Hall. The Cameroonian capital is hosting the 9th edition of the International Trade Fair for Business and SMEs, Promote 2024. This year, the spotlight is on Made in Africa. The forum connects over 800 exhibitors from about 60 African countries. Slimane, the head of an Algerian company specializing in biscuit and wafer production, is seeking African partners.
We have our product distributed all over Algeria, and we would like to distribute our products throughout Africa. That's why we participated in the Yaoundé Fair today, which is a very important fair that helps promote African products in Africa.
Kindak Company, specialized in plantain banana processing, is a highlight of this forum.
We process the plantain into wine. As you can see at the back, we also process it into flour, grist, and we also process the plantain fiber. Our products are sold throughout Central Africa and Europe as well.
The Cameroonian government is heavily involved in organizing this forum. The United Nations Economic Commission for Africa is also committed to promoting Made in Africa.
Today, we have a common vision for Central Africa. It is to turn Central Africa into a world-class manufacturing base for the local processing of our strategic raw materials and critical minerals.
The Economic Forum for Businesses and SMEs aims to increase Africa's share in global trade.
And that wraps up this episode of Business Africa. I am Ronald Kato. The news continues on air and online. Bye for now, and I'll see you on the next episode of Business Africa.
Business Africa was presented by Turkish Airlines.